stock-based Optimism cites a valuation advantage. An IT giant, over 90% of revenues from exports, largely from America, UK and Europe. Multiple business segments. At the foremost with the lion's share is banking, financial services and insurance, BFSI. Market leadership. A huge market capitalization of over rupees 11 lakh crore plus. Price earning multiple quite modest, decent and hence attractive. Tata Group, the promoters of TCS, hold over 70% of shares. TCS has a strong support of over 23% from FPIs, domestic institutional investors and mutual funds in aggregate. A very strong and stable shareholding pattern. Operational excellence evident in the success of capital deployment, a rising trajectory of impressive return on capital employed ROCE, a rewarding return on equity of over 50%, capitalizing on the experience and reputation of over 5 decades as an industry leader is evident in exceptional returns. Solid financials, totally dominated by a strong and growing net worth. Funding of gross assets to the extent of 60% is quite phenomenal, also noting a gradual fall in the percentage with higher growth rate in gross assets. Aggregate liabilities, both short and long term, are comfortably covered by current assets with a substantial surplus year after year, a reflection of ready to deploy liquidity for organic and inorganic growth. TCS, with its sizable regular dividend, meets the income expectations of its investor families. As a reliable cash cow of the Tata Group, TCS is known for a consistent payout of around 75% over last 6 years. The dividend yield works out to an impressive average of 2.7% over the period, also due to a subdued market price in recent years. Proactive capital allocation, forward-looking leadership focusing on investment in technology of the future. With a customer-friendly business partner, TCS has stayed quite successful in gaining client support, resulting in a strong order pipeline. But with a major export market exposure to US and Europe, TCS is faced with the challenges of global geopolitical tension. Continued uncertainties on US trade policies has caused heightened tensions. This has resulted in sharp shortfalls in revenue and profits in recent quarters. Impacted by deal deferrals in recent years, the growth rate of revenue during the last 2 years has been sliding down, resulting in a lower single-digit growth. Profit growth has also taken a downturn during the period. Rising costs in the major component of employee expenses has put intense pressure on margins, and that remains a concern. Over latest 4 quarters, stagnation in the volume of trailing 12 months EBITDA is quite evident and is worrisome. It highlights a fall of over 600 basis points in the EBITDA percentage over the recent 4 quarters, moving it closer to a level 2 years ago in June 2023. That is a special concern. It is satisfying that TCS is actively implementing risk mitigation measures, including planned layoff, towards a lean and effective, nimble structure of service teams. The valuation as at the end of FY24 at rupees 14 lakh crore has fallen about 18% to the current level. Incidentally, this is where the stock was at the end of FY21. That is the extent of damage inflicted by the market. Over last 12 months, TCS has recorded a gross underperformance in comparison to other major players in the industry as also to the overall market index. Underperformance across 12 months is just disappointing. Ever since November 2023, the price movement was strong, being above 200 EMA for over 16 months. Price slide of March 25 pushed it into the bearish zone with a fall of almost 24% to date. Going by a triangular pattern in price movement, the first completed triangle formation evident in September 22, the second ongoing triangle could be expected to complete closer to the current level. It is likely that a directional change in prices is fast approaching with a higher degree of certainty. Price earning multiple at a median level moved from a 10-year timeline to a 5-year timeline going up, but the slide from 5-year timeline to 3-year and then to 1 year and to the short-term period is in a deeply descending channel. Considering the hopes of better prospects from H2 of FY26, the current price earning level might prove to be an investment opportunity worth a serious review. Hope you found this video on TCS to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You can access videos of similar quality at our info card. We look forward to your valuable suggestions for improvement and await your subscription if you are not already one. Thank you so much for all the kindness. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.